Hey YouTube, this is Zach with Achilles Financial. Today I'm going to be talking about two ETFs in particular that I think are showing a lot of vulnerability. They have a lot of options prices, strike prices that you can utilize, as well as they have a lot of opportunity to the downside, and I think over the short term, minimal upside associated with it. Today we saw a lot of moves, and today the first one that we'll be talking about is the Russell 2000 or IWM. We saw a lot of moves. In particular, I'll look at the 5-day to the downside. The primary reason for this is we had updated CPI or consumer price index numbers showing a lot of inflation that does not appear to be transitory. So there is a lot of downward pressure from an inflation perspective, causing downward pressure on these growth stocks, as well as there is the expectation that they won't be able to monetize debt as easily going forward. Now, when I say these growth stocks, looking at IWM, which is one of the two funds I'll be looking at today, I'm just going to highlight the top 10 holdings in the portfolio, and you can see why I feel this way. Again, right now we've got AMC, which is up currently more than 1,900%. I do not have the expectation that they are always going to be this highly thought of. We also have Intella Therapeutics, Arrowhead Pharmaceuticals are both highly up there. Both of these are in the healthcare space, as well as you can see Star Surgical and Denali Therapeutics. Normally, we don't see this many healthcare stocks in terms of the top 10 holdings associated with a fund like the Russell 2000. The idea behind that, or my concern with those stocks up there, is healthcare, especially companies like this, which are not huge healthcare companies that have all these different products, is they're highly susceptible to pullbacks. Some other companies that are up here that I'm not as concerned about from a overall company standpoint, but definitely from a valuation standpoint, is you can even see Crocs up here. So again, we're seeing some crazy moves from these companies. Other companies in here to include like Plug Power, which you know my feelings on that. But I just want to highlight that in terms of the valuation, if you look at the growth, earnings are down historically. We also are seeing negative sales growth and negative book value growth. During the same time, we're hitting record highs on PE ratios, price to book ratios, price to sales ratios, and the companies aren't making a lot of money. So with all that being said, when we talk about how much is in here, there is a lot of fluff. You can see that the stock has been, or the fund has really been holding around this 230 level, and we're seeing those declines. We haven't had a big break below 220 this entire year. What I'm going to be looking at is similar to what we saw back prior to April during March, is I want to see if we make that move to target 210. So if we look at the options premiums associated with this, you can see that there is a lot of strike prices, and I only have the ones near the money right now, but just to showcase on either side, there's still a lot of opportunity. These are the November ones. Even if you go out to September though, a 220 put is going to run you $800. There's a lot of room for upside there. However, what I would like to look at is not just the near the money, but really the farther, and I'll actually do all of them. But really what I'm going to be looking at is if you go out to the end of September, there is a ton of options to choose from. If you look here on the put side, I'm going to be looking at the 205 to 210. This is a play we've done prior to this year, but you can see they're running for $500 for the 210s, and the 205s $400 a piece. There is a lot of capability and a lot of time for an index which has a lot of fluff. So for that reason, this is going to be one that I want to watch, particularly to the downside. A $4 move or nearly 2% on an index this size is a big one. Again, keep in mind when we're talking about buying these puts, though, this is a very risky form of investing, and I am by no means a financial advisor. I do list out my trades in the Discord in the description below, so when I make this move, I will be letting you know, but this is one of the ones that I am watching. So if you've made it this far, please let me know by commenting down below saying your thoughts on the Russell short, and if you think that there's any potential there, and if you find this content helpful, please leave a like and subscribe. So if you thought that the Russell was controversial because it has AMC in there, then you're going to love the ARK Innovation Fund that I have here on my screen here. As you can see, again, with the year to date, we are well off the highs that were made earlier this year. but I am aggressively looking to short ARK once again. I think that this is similar to buying calls on the VIX, in which case there's a lot of exposure here and there is a lot of capabilities. So one of the things that I would highlight for ARKK or the Innovation Fund is I actually like a lot of the companies in the portfolio. In particular, I'm a big fan of both Square, Spotify, and something that's, it is Shopify as well. Huge fans of the companies. That being said, everything up here has ran up just by a crazy amount. You can see right here, price to book 803. The PE ratio is showing negative, which means these companies are not earning money. And you can see that their price to sales is 14.57. So there's a very high price to sale, no PE ratio, incredibly low dividend, and so these stocks are just have all of this air in the fund, and we actually saw them crest down below 105 earlier this year. Again, if we go back to the chart, we played it when this happened, so we were playing it around the 115 to 110 range, and we actually rode these down. In the same vein that IWM has a lot of capabilities to go to the downside, we also have the same thing here with ARK Innovation. So if you go into the option chain, we actually have a very similar capability where I'm going to continue to look at these September ones. You look at we're going to go with all. You can see that the puts here, I'm going to look at the 100 puts, less than $200 for one of these puts. You can see right here there is quite a bit of volume, but there's a lot of potential here for, again, we don't need a huge move in the stock. If the stock were to move by another 2 to 3%, you would be able to walk away with a profit, or I could sell the $99 put to lock in that gain and still have some of that downside exposure. So keep in mind, this is a different story where there's a lot of companies in here I actually like, unlike the Russell 2000, which just has a ton of companies in there that just aren't making money, and I don't anticipate them to all be around 10 years from now. A lot of what you do see here, I do anticipate to continue to be around, and for that reason, I like a lot of these companies. I have invested in Shopify, but there's a lot of fluff in them just due to the fact that valuations are crazy right now. If we continue to see upward pressure on bonds like we saw in February, we may see a move similar to what we saw in February of this year when the 10-year went to 1.75. So if we see a move to 1.5, which I think is healthy from an economics perspective, 1.5, 1.6, we could see additional pressure that would cause this to drop below 120. So this is what I'll be watching going forward. Again, I understand that there may be some controversy associated with this due to the fact that it is shorting in nature, but I'm just buying the put. So if you find this type of content helpful, please consider leaving a like and a subscribe, and let me know what you think in the comments down below. Thanks. Talk to you later. Bye.